Hello, everybody, and thank you for joining me on another episode of Powerhouse University. This is a YouTube channel where we focus on commercial real estate, investing, and entrepreneurship. Today, I am accompanied by Hoss Ghassemi.
Yes.
Hi, 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 Hoss. How are you today?
Hi, Jackie. I'm good.
That
Doing great. How about yourself?
I'm doing pretty good. Thank you for
Good.
asking. Now,
Yes.
to introduce to give the audience a little bit of background on who you are, I just want to just let them know your title. You are a lender, focused on small business loans, and you are in the Los Angeles area, correct?
Yes.
Yeah,
Yes,
yeah.
that's correct.
Okay, and this is the target, the market that your target market per se. Can you give us a little bit of background on who you are, what you do, and how long you've been in the industry?
Of course. You told me you said you mentioned the name, so it's Hoss Ghassemi. Currently, I am working as a broker with Convoy Capital. Yeah, I've been in the business for 25 years, and all in commercial, nothing in residential. I started with commercial. I worked for different banks and including a Korean bank, Bank of America. I used to be banker, broker, but now I just chose to be a broker because I have more variety of banks to go to, and I don't have to turn down the business. Because when you're with once a certain bank, they only do certain loans, and then you have to let other loans go. But now I can do any kind of loans I want in
In
commercial.
any type? Okay. And then any type in commercial that covers retail, office, industrial, multifamily, etc.
Yes, yes.
Okay. All
It
those,
covers multifamily, retail, industrial, office building, medical building, healthcare, gas station, car wash businesses. Yes.
etc. And how long have you been doing this?
25 years.
25.
25. Yes.
25. That's
25.
a long time, a long time. So that means that you are here to give us a lot of information based on experience in the industry, and I'm pretty sure you've seen a lot of things thus far.
I've seen a lot of ups and downs
Yeah.
in the market, and yeah, I'll do my best to say anything I know.
That works for me. And then, so to get right into the question and answer portion of this interview, I do want to start by pretty much asking you, can you give me a little bit of information on how many ways someone could get a commercial loan? How many different type of loans are out there for commercial real estate?
Of course. Commercial, when somebody calls for a loan, the first thing we ask, is this an investment or it's owner user? Loans are the first one is the bank loan. The second one is it could be SBA, it could be commercial. If it's owner occupied, we could go SBA route, which I'll explain later on when you ask me the question. It's you can go as little down payment as 10%, but versus in commercial, you need about 35% down. So in commercial, you can do seller carry, you can do bank loan, you can do there are Fannie Mae and Freddie Mac, and there are life insurance companies for really large loans, and what's called CMBS, Certified Mortgage-Backed Security loans. So those are the three, four kinds that you can do loans on a property.
And I'm assuming that the type of loan that you go after is really based on how you are going to use the building. If you're a owner user, so owner occupied, like you said, that's where it comes into the SBA category. And I'm assuming there's also a multitude of questions you ask in order to find out which way someone should go when looking for a loan.
Exactly. The first question is like the property, what type of property is. If somebody says, I'm buying an office building, and then I ask, for what purpose? Are you going to use it as an owner occupied, as an insurance agent, doctors, lawyers, CPAs, whatever their profession is? And then the second question is, if they say yes, I'll offer them, hey, you have choices of doing SBA or commercial. Then it depends on their financials or the situation. A lot of people, they like to put more down payment to have a lesser monthly payment.
Mhm.
A lot of people, they don't want to tie up the money at the beginning, 35%. They prefer to put as little as 10%, and they're okay with higher payments. Of course, we have to have cash flows and everything after we look at the financials. But that's how the norm of my basic question is this owner occupied or is this investment? Then if it's investment, if it's an apartment building, it's not going to be owner occupied because you have to, by law, you have to occupy 51% of the property. And if it's a 10 unit, obviously you're not going to occupy 5 units. So
No.
if it's an apartment building and they say it's an apartment building, that question is eliminated. But anything else, I need to know if it's owner occupied or not.
Okay.
Then we'll go.
Yeah. So I do want to can we talk about the loan cycle, like what steps somebody goes through in order to qualify for the or get the loan, excuse me. And then this is going when you explain the loan cycle, is this going to exclude multifamily or is it all
No,
the same?
no, it's all the same. The
Okay.
cycle is the same. Pretty much 90% is the same, except in SBA, we asked for a couple of extra documents or asked a couple of extra questions versus commercial, we don't. You know.
Okay. So
Uh,
yes, can you explain the loan process
of
to
course,
me,
the
please?
loan process, the first thing is qualifying the client over the phone. What is it you're buying? Because I've had phone calls that they say, I'm buying something, I'd like to buy something for $5 million. I only have $50,000. It's not going to work out. If you are buying something owner occupied, you need to have minimum 10% down with the house as a collateral. That's the key. If you're putting 10% down, you have to have a house as a collateral, backup collateral. If you put 15% down, then you don't need additional collateral. The building by itself will cover as long as you have the cash flow. Once I ask the question and they say, yes, I'm buying it, and yes, I do have 10% or 15% down. Or if I have, yeah, 35% down. If let's say I'm buying something for $1 million and I have $350,000 down. The first thing I say, send me 2 or 3 years tax return. 2 years for the commercial, 3 years for SBA. They send me the tax return. I'll look at their financials. And of course, I'll ask them about their credit history. If they're okay, if they tell me they're okay as far as no credit issues, I'll take that until we pull the credit later on, or the bank will pull the credit. If they say, no, I do have some credit issues, I want to know some details so I can work around it. I've done loans with bankruptcy. I've done loans with evictions. Yes, there are ways to explain something that happened in the past. It was a circumstance that the buyer was going through or the borrower was going through, and we explained that. And the bank usually, they accept it if it was one time thing. If it was a multiple thing, then that's a different story. Then we have to have a different approach. Now we qualify somebody over the phone. They send us a tax return. We see we have the cash flow. Cash flow is what they have to show on the gross and they have to show on the net, which means they have to have enough money to pay for the building or the property they're buying. And once we do this, I get a small one-page application, very simple. I did it myself. I put them together, all the necessary information rather than going pages and pages, because I have to send it to 5 different banks to see who gives me the best rate. I shop around for the client. And then once I do that, I collect the information, the 3-year tax return and one-page application. Excuse me. I send it to 5 different banks and I get a kind of like a bid. What is the best rate they have? Rates usually are pretty much plus or minus half a point for the most banks. So some banks, they compete, some banks, they don't. Some banks are a little more conservative. Some banks are a little more lenient, and they're a little more aggressive. So once I send it and one bank or 2 banks or whoever responds, I get something in writing, which we call it letter of intent or LOI. Once I get the letter of intent, I send it to the client. Everything I I mentioned or everything the bank mentions, it is spelled out completely on the letter of intent. Everything. It covers from the interest rate, the collateral if we need it, everything that they need to know. And how much do they have to come up with the down payment, and what is the cost of the loan, how much they have to pay, if there's a fee to the bank. All those things are covered on that couple of pages of letter of intent. Once they see it, they like it, they sign it, and they give us a good faith deposit in the name of the bank. The check will be cut, or they can wire the money to the bank, and bank will start working on the signed letter of intent, and they'll start collecting more documents like the insurance, like all the financials, everything else. And then once they have, in the meanwhile, they order the appraisal. Appraisal goes out within like 3 weeks. It's ready, and in the meanwhile, they'll collect all the information they need, and the loan will be underwritten. And once the underwriting is complete within that 3 weeks, and the appraisal comes back to report, if we have the value of the purchase price, or let's say the refinance, it doesn't matter. As long as we have the value and loan to value, it goes to the final underwriting, and then it has to go through a series of steps, which is behind the scene. Layman people, they don't need to know, but they call it, just goes through underwriting, but in reality it goes underwriting, and then goes to underwriter's boss, and it goes to credit admin. They call it credit admin. They make sure every document has been verified. Then it goes to chief credit officer. He reviews that. Then it is scheduled for loan committee. Every loan commercial has to go through a loan committee. 9, 10 people of the bank directors, they sit together. The loan officer, who is the bank reps, he explains everything. He tells them about the loan, and they ask some questions. And once they're done, whether they approve the loan or they deny the loan. With me, I've never had any issues, luckily. And they approve the loan, and it comes out when the loan is ready. It goes to docs, and the docs are pulled, and after that, closing and funding, and that's the entire process of from A to Z, which takes about 45 to 60 days.
You actually answered my next question, because I was thinking in my head that seems like a long process. So when you start, there's paperwork that you have to fill out and get approved. Now, I'm trying to understand it in my head. Does the approval happen in the beginning, or does the approval happen at the end? After all the You said that you fill out a one-page document in the beginning, and in the end there's more documents?
Excellent question. A lot of people ask that. Then what is the LOI? LOI is not the approval. LOI is something the bank says, yes, we have the interest to do this. If the credit is good, if the financials are good, if the cash flow is there, if the underwriting is completed, and if the appraised value is there. So these are all if we have all these packaged together, yes, we could do that. So that LOI is just a letter of interest.
So it's really like, in thinking about it in my head, it's really like when you get email or messages from credit card companies, and they're sending you things in the mail that said that you're pre-approved. However, that does not necessarily mean that you are approved yet, because there's still a process that you have to go through in order to find out what you're approved for and how much.
Very similar to that, except one thing. When that letter comes out as a marketing tool for credit card company, they send that, they're saying you're approved because we feel like you have a good credit. But in the bank, they actually, I would say, most of the time, the letter of intent covers the whole thing. Meaning, when they see that, they already covered the cash flow, they covered the credit, they covered all those things except the appraised value, and unless if any surprises comes up, all of a sudden something comes up, something unknown that the client didn't disclose or something like that. Other than that, pretty much the LOI, even though it's not guaranteed, but pretty much LOI is something that later on, yeah, they do that.
Okay. And then the question I had for you next actually left me. It had something to do with the, forgive me, I'm trying to
Oh,
remember.
it's okay.
Um, Let me ask you the next question, and then if it comes back to mine, we will circle back to it. But I did hear you also mention that as a loan broker, you are pretty much you have a company that you work with, but you operate different from a bank. And in operating like that, you do in fact charge a certain fee when it comes to assisting with the loan process. Can you tell me why someone would call you as a broker versus going directly to a bank?
Sure. If somebody has time, or if they know where to go, obviously they can save the fee that they have to pay me. As a broker, the usual norm is 1 point. 1 point means 1% of the loan amount. So let's say if the loan amount is 1 million, so the fee will be $10,000 that they have to pay to the loan broker. But what is that 1 point covers is the shopping around, putting the package together, the relationship that I have with the bank, the way that I have to present it to the bank, and I'll be involved with the package and the deal from A to Z, from day one until the last day. I'll hold the client's hand, the borrower's hand, all the way through the thing. So this is very important to do that. Some people don't prefer. They say, no, I have a relationship with the bank. I'm banking with, let's say, so and so bank, and I wanna do that. Sure, I want to go to the bank myself and do it right, and they can save the point that they have to pay me. But certain loans, or most loans, if you want to shop around, it's going to take days, because the loan officer who's sitting in the bank, first of all, people, they may not know. Yes, they can Google it, but then again, you don't know the person who's sitting there, who is responsible for that, who is the direct person that you need to go. So these are the things that I make that happen real quick, real fast. Because if you want to do it yourself, you have to call days and days and days. And sometimes it takes them 24 to 48 hours to come back to you. And by the time they come back to you, you only have a certain amount of time when you're doing a purchase. In refinance, it might be a little different, but that's the benefit of going to a broker, finding the best rate, holding your hands, doing the entire thing, being your support.
Which makes sense. So it's like a concierge, so to
It is a
speak.
concierge. Exactly.
Yeah,
Exactly.
yeah. And then the other way that I could best describe it is using real life examples is if you go to a car dealer and you go there and they shop around for the best deal for you and you end up with a deal that's at a bank that you're not necessarily familiar with, or you go to maybe your bank directly and based off of relationship, I guess is where they could approve it. So it's versus you going to the bank directly and them holding your loan because like you said, some people say I have a relationship with my bank. So you go there, they hold your loan, or you could go directly to the car dealership and they'll shop around for the best rate for you.
Exactly, you said it right.
Yeah.
I've actually, it has happened to me. I went to buy a car and they said, "Oh, we'll shop around. We'll give you the best rate, or you can go to your own bank." And I went to my own bank and I saw my bank's rate is a lot higher than what they're offering, because
Mhm.
they shopped around and they find the best rate. Yeah.
Yeah, yeah,
So
but yes, and then
good
too, and then
example.
when it comes to what you're doing, it's service oriented too, and the relationships that you create with the banks and the individuals that you work with in order to find the best rates for your clients.
Yes, and also I gotta give you a small little behind the scenes secret. um, banks, they like your business and they care about your business. Please don't get me wrong, and I don't mean no disrespect to any banking industry, but if your loan doesn't go through at the end, they'll have no problem saying, sorry, after 2 months, after 3 months. I get a lot of calls. They come to me after 2, 3 months. Oh, so and so bank denied me after 2 months. But how come they didn't do it the first day? But with the broker, it is a little different because if they deny the loan after 2 months, yes, at the beginning they can say this is not our specialty to do this loan. But if they wait 2 or 3 months after that, if they want to turn me down, uh, it's a bad practice. And I certainly will not take another client to that bank. Plus, I might say, express my feeling or share my experience with other brokers and say, hey, this bank dragged me for 2 months. And after that, they said no. So there is a big difference of turning a client down by itself, by the person individuality, or to me as a broker, because they don't do that to brokers
Mhm.
unless it's at the beginning, like I
Yeah.
said.
And then it's a clear definite example of how they say time is money because you're wasting all your time waiting to get approved and then you wait 2 months to find out they didn't approve you. And with you, you're straight to the point, you get everything that you need done. So at the end, you're not r- as disappointed
At this point,
if
exactly.
if you
Many times, Jackie, believe it or not, people call me. They said, "I have 10 days to close. We've removed the contingencies, and can you do a loan in 10 days?" I said, "Absolutely not. Nobody can do it in 10 days." And they ended up getting a hard money and closed the deal. And then they came to me, and I closed the deal after that with the banking. And they incurred extra costs. And you know how hard money is. Usually the fee is like 2 to 3 points to
Mhm.
charge, plus what the broker charges, all those things. And those are very, very costly. The closing costs, the title, because they still have to do the closing, they still have to do title escrow, and those are all closing costs. And then all of a sudden, in a month after, 2 months after, they have to do the bank refinance and pay that fee. So, in my opinion, and again, I'm not trying to sell anything. It's just talking to the audience. I'm saying it's better to go from directly from the beginning to the broker. Let them shop around for you. Let them find the best rate. Let them do their best, and that's the best way to do that.
Yes. And then hard money loans, I'm assuming too, is if you're using that as a bridge to a SBA or any type of loan, there's also risk involved in doing it that way too, right? Trying to rush the process.
Yes, because sometimes in 10 days, it's impossible to find hard money.
Mm,
A lot of people, a lot of time people think, oh, it's hard money. They're going to do it in 48 hours. Yes, but for that, they still need to do appraisal. They still need to open escrow, to close escrow. They still have to fund it, record it. All those things has to happen. And it will not happen less than 2 or 3 weeks. And unfortunately, when they remove the contingencies, and there's not much you could do except getting hard money or borrow the money from friends and family. You pay it off, and it's a large scale. It is very difficult to borrow that money, so you need to go through hard money.
So if an individual was turned down for a loan going through you or a bank, would you recommend they wait a certain amount of time or try a different option as far as going a different route to find another bank to use, or what would you recommend in your best opinion?
If they come to, if they go to a broker, usually each broker, I would say, or at least I do that. I go to 5 different banks. And I'll always keep one of them as a back in the back burner as a backup in case. And I tell them the honest answer. I say we're up against 2, 3 banks altogether, and the client chose this rate or this one. And if they're turned down, then I'll go back to another bank as a backup and I say, hey, are you willing to do this? That one, the other bank turned it down and it didn't work out. Luckily, it has never happened to me. But is that a good idea? Yes. But do they have to wait? No, they don't have to wait. Because on a purchase, how are they going to do that? You need to close the deal. Seller is pushing you close, 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 and it's very time consuming. You have to cancel the deal. If you haven't removed the contingencies, all your schedule is going to be postponed, or it's not going to work out. So you need to do that. You need to do the hard money. In the meanwhile, look for another bank to do it. But yes, I do recommend, rather than waiting, immediately to shop around and
Sure.
find another lender. But a good broker who does commercial all the time, at the beginning, they can tell if this loan can be done or not. That's number one. Many, many times I tell people, no, this is not going to be done. They've shopped around, they came back after 5, 6 months. They said, yeah, we still couldn't do it alone. So if a broker knows underwriting, has a familiarity with all the numbers and everything, how to put the numbers together, and to do the calculation as like similar to underwriter, they can tell upfront, yes, I can do this deal. And then when they go to a bank, because we work with the banks day in, day out, we know which bank does what kind of loan, and that will be done. Yes, but expectations have to be realistic, because sometimes people say, can you do 80%? Yes, banks might tell you we do 80%, but at what debt ratio? At debt coverage ratio of 125. These days in California, it's almost impossible to find a property that will debt service at 125 debt ratio to qualify for 80% loan to value. It will not happen. That's why a lot of times, you have to end up with 65%.
Okay. All right. And then to get to the last question, we got about a 3, 4 minutes left here.
Mhm.
There is a lot of movement going when it comes to interest rates. You have a lot of companies moving into California. You have a lot of companies moving out
Out of
of
California.
California.
Right.
Now, from what you've seen with the loans that you have been doing, what have you seen recently, have as far as investing is going? Do you see people coming in more, or do you see people moving out?
I've seen both. I see a lot of people moving. Last year, I heard 500,000 people, they moved to Texas or elsewhere, and a lot of people through the jobs, or they want to come to California because of the weather. They come here. But the whole thing is it's kind of balancing it out. But I see more people going out than coming in.
And then would you say it's better to invest in or out of California?
Okay, it totally depends on the investor. If you are looking for growth, if you buy something, a property in a prime area in Los Angeles, that by next year, if it doesn't double, it's going to go up 10%, 15%, 20%. I would say definitely if you're after growth, here's the best place, because you can keep it for a year or two, and then after that, sell it for 20% profit. But if you're looking for immediate cash flow, definitely out of state is a better investment, because you will not have that growth. If you buy today for 1 million, 5 years down the road, you might sell it for 1.1 million. But then do you have a cash flow? Immediately. Because the down payment, the rent, everything it works out better out of state if you're after cash
And that's all the questions I have for you today, Hoss.
flow. That
This
was
was,
great.
yeah, this was a lot of information, and it was all good and educational for me to know and for the audience. Before we end this, can you let everyone know where to find you, how to find you?
Absolutely. Hoss Ghassemi. My phone number is 818-645-2746. or they can contact me at Hoss at Convoy Capital. I'm sorry, Hoss at convoy-chap.com.
All right. And there you have it, everybody. Thank you for joining me on another episode of Powerhouse U, and we'll see you again soon. Thank
Thank you,
you.
Jackie.
You're
Thank you.
welcome.
Bye bye.
Bye.
Bye.